Okay, good morning, everybody. Welcome to the Nottinghamshire Pension Fund Committee. I'm Councillor Eric Kerry. I'm chairman of the committee, and may I remind members here that the meeting is being broadcast live. And can I ask you to use your microphones when speaking and turn them off when you finish speaking, please, so you can be heard on the broadcast. There's nobody in the public gallery. I hope there are people watching online, so I won't be reading the notes we normally say at this stage. I'll move on to the first substantive point, which is agenda item number 1, which is the appointment of the chairman and vice chairman. So the committee is asked to note the appointment by full council on the 16th of May 2024 of Councillor Eric Kerry, myself as chairman, and Councillor Sue Saddington as vice chairman of the Nottinghamshire Pension Fund Committee for the 24-25 municipal year. So can we take that as noted? Okay, thank you very much. Also, item number 2, moving on to that in your notes, further down on page 2, the membership of the committee for the 24-25 municipal year. The committee is asked to note its membership for the 24-25 municipal year as set out on the agenda cover sheet. So again, can we note that, please? Okay, thank you very much. Moving on to item number 3, which is the minutes of the last meeting, which we held on the 18th of April 2024. May I ask the committee if the minutes from the last meeting are agreed? Any errors, corrections in the minutes? Okay, I don't see any, so thank you very much. I will sign those minutes later. Moving swiftly on to item number 4 is apologies for absence. May I ask Joe Toomey to confirm today's apologies and substitutions, please?
Thank you. Today we have apologies from Councillor Place, who's being substituted by Councillor Creamer, Councillor Clark, who's being substituted by Councillor Allen, and we also have apologies from Councillor Purdue-Horan, Councillor Devinda Verdi, Councillor AJ Matsiko and Yvonne Davidson.
Thank you very much, Joe, and thank you for your substitutions today. And I was remiss of me not to mention Mr. Lewis Gordon, who's joining us as a trade union representative today. Can I welcome you to the committee, and I hope you have a long and enjoyable period with us. Thank you. Okay, item number 5, declarations of interest by members and officers. Does any councillor or officer have any interest in any matter on the agenda which you need to disclose, please? Okay, I don't see anything, so we'll swiftly move on. Item number 6 is Pension Fund Treasury Management Outturn for 23-24. Before I hand over to Kieran, who will introduce the report, I'd like to move the recommendation, which is on page 11 of the agenda pack, on item number 13 on that page. A seconder, please.
I'll second that, Chair.
Thank you very much. Kieran, would you like to take us through the report, please?
Thank you, Chair. Responsibility for the Treasury management of the Pension Fund was delegated to the Pension Fund Committee at full council in February 2020. As a result of this delegation, the Pension Fund Committee is receiving the year-end Outturn report for the year 23-24. The main points to note are that cash investment activities have been in accordance with the approved limits set out in the Treasury management policy and strategy. All Treasury management activities were undertaken by authorised officers within the limits agreed by the committee. Investments were made only to counterparties on the fund's approved lending list. At year end, the fund's cash balances totalled 163 million, and the table in paragraph 9 shows the types of investments that this cash might be called down for at short notice, in addition, of course, to providing funds for the monthly pension payroll runs. Over the course of the year, the fund earned 5.06% on each cash investments, slightly above the adjusted sterling overnight index average of 4.84%. Also, comparative data was sought from our LGPS central partner funds, and we had some response to this, and our rate of return it seemed to be broadly in line, if not slightly above those of our partners. Thank you, Chair.
Thank you very much, Ken, for the report, and well done in getting that 5.06 compared to Sonia. I think Sonia will be feeling very disappointed today not achieving the results that you get. Okay, any questions or comments from members? No. Oh, Councillor Chapman.
Yeah, well, two things, and both positive, really. The first is performance seems to be very good comparatively, and I think it's probably improved. I've seen improvement. Second, I was nagging about this 2 years ago about getting comparators, and I was told that it wouldn't be appropriate and it's difficult, right? And so it's one of those circumstances in which very often officers promise things and don't deliver. And here I've had a refusal and they've delivered. So thank you very much.
As you do know, Councillor Chapman, we do try and be as transparent as we can. Sometimes it might be difficult to provide details.
It was a very pleasant
we do try
surprise
hard
to see something I said couldn't be done.
Thank you.
Being done.
Thank you. Okay, so we've had and we've moved the report and recommendations. Can we all vote in favour, please? Show of hands. Okay, that's unanimous. Thank you very much. Okay. On to item number 7, which is the visit to the LGPS Pooling Symposium. Before I hand over to Tamsin, who will introduce the report, I'd like to move the recommendation, which is on page 16 of the agenda pack.
I'll second that, Chairman.
Thank you, Councillor Saddington. Tamsin, would you like to take us to the report, please?
Thank you, Chair. The LGPS Pooling Symposium was held on the 23rd to 24th of April 2024. The conference was attended by Kieran Guilfoyle and myself. Details of the main sessions are set out in the report. The conference provided an opportunity to discuss pooling issues and share experience with colleagues from other funds and pools. Thank you, Chair.
Thank you very much, Tamsin. From the amount of detail in here, it obviously seemed a very busy and informative symposium, and obviously used to us with our involvement in the LGPS pool and its wider family. I guess that we're attending more of these kind of things in the future, should they be around.
We'll certainly consider doing that, yeah.
Thank you. Any questions or comments from members, please, about the feedback from the symposium? Okay, Councillor Butler.
Not a question, just a comment really. It was plainly a very busy couple of days for you, but I think that your summary here is actually very helpful. Each point you got here is short and to the point, and it does make some sense to laymen like me. So yeah, and I see your recommendation is to perhaps carry on with this, because it was the first time that you attended this, wasn't it? So it was an interesting, helpful report. Thank you.
Thank you, Councillor Butler. And just to say that the attendance isn't limited to officers and chairs, vice chairs, that kind of thing. If anybody wishes to learn more about pooling and its strengths, weaknesses and future direction, we're quite happy to let you attend. So please let us know if that's the case. Any other questions or comments, please? No. Okay. So we've moved the recommendation. All those in favour, please. Show of hands. And again, that's unanimous. Thank you very much. We'll now move on to item number 8, which is the Independent Advisors Report. The committee will now receive Independent Advisors Report for Nottinghamshire Pension Fund Committee. Before I hand over to William Bourne, our Independent Advisor, I'll move the recommendation, which is on page 19 of our papers.
Second that, Chairman.
Thank you very much, Councillor Saddington. William, would you like to take us through your report?
Thank you very much, Chair. I'll spend a very short time on the short-term outlook and then a little bit longer on the longer-term outlook. Broadly, inflation is falling, The latest number for the UK was 2.4%, which is actually the lowest of the major economies. America's came out yesterday at 3.3%. And yeah, it is falling, but it's still above the level which central banks are targeting of 2%. We've seen the odd rate cut. Canada, the European Union, America this morning or last night said they were looking to cut once this year, but don't make the mistake of thinking we're into a new rate cutting cycle. Current rates of 4 to 5% are basically where they should be. They're normal interest rate levels. And you may get one rate cut from the UK, but it won't be more than that. Growth is still pretty hard to find in the world. The US is growing, the economy there is growing quite nicely, but the rest of the world is really finding it quite difficult to stimulate growth. And I think, I know at the election, a number of parties are saying that it is, that growth is the way to get out of the kind of tax and spend to make their budgets balance. It's going to be very difficult indeed, I'm afraid. But broadly, the short term is fairly benign for markets because we've got stable interest rates, we've got inflation reasonably low and falling, fairly loose fiscal policy, fairly loose monetary policy, and that's really why markets are going up at the moment. Looking at the long term, I think there are definitely some problems looming. And I'm going to focus on the cost of debt service. And what that is the money which governments are having to spend to pay lenders who are lending them money. And at the moment, in the US, is spending about 16% of all its expenditure is going purely on paying debt holders. The UK, the number is 11%. And this is a bit like you're spending 16% or 11% of all your expenditure on your mortgage payment. The trouble is, it is almost certain to go up, and it's likely to go up either, well, for various reasons. One is some countries think the US are not balancing their budget, so their levels of debt are going up, their mortgages are effectively going up, and that's going to cost more. Second is that bond yields are going up, and if governments have to issue more bonds, then again, that's an increase in supply, and other things being equal, the yield they're going to have to pay is going to go up, and the cost of debt service is going to go up. And then thirdly, inflation can also have an impact because where governments have issued index-linked gilts, as ours has here and the US has, if inflation goes up, the amount they have to pay goes up. And it really matters. It really matters because every penny the government spends on this is a penny they cannot spend on real needs. And that's why the IFS said last week that the UK has got very little room to cut taxes. Because if we do, we almost certainly end up getting caught with higher cost of debt service. Why does it matter to the pension fund? Well, it's fairly clear to me what is ultimately going to happen. And that, well, I can already see the US going down this route, that they are financing less by issuing bonds, which are long-term bonds, which lock in your cost of debt, but you do have to pay with your debt for 10, 15 years, and more by very short-term finance, 1 year, 2 years. And it's not quite the same. It's very like going back to quantitative easing, which we had between 2008 and 2020. And the end game, this is why it matters to us here, is inflation. There's almost no alternative to inflation in the long term because you are effectively devaluing the value of your paper. So why I'm kind of going through this slight rant is because, to my mind, in the short term, we're absolutely fine. But over the next 3-5 years, we need to just gently build up assets which protect the fund against the risk of considerably higher inflation. And equities do the job to a certain extent because they are growing assets, and therefore, over the long term, they will have some correlation with inflation. But I think we actually need to kind of put more into more direct hedges, and the obvious one is index-linked gilts. We put in a 3% weighting to it at the last. You agreed to a 3% weighting to index-linked gilts at the last meeting. We haven't yet implemented it because the price at which you buy it really matters. We've set some triggers. We got very close to one a couple of weeks ago, but we're trying to be disciplined as to how we actually, at the level at which we put in index-linked gilt protection. But I'm absolutely clear that over the next 5 years, that's the direction of travel. And I think almost more important than anything else for this fund's long-term health. I'll stop there. I mean, there are other things I could talk about. I just want to make it really clear to the committee that this is, for me, the number one risk.
Thank you, William. Yeah, very interesting the point you made. I mean, what you're saying really is, in matching our liabilities with that inflation going up, we've got to find ways of reducing that risk and matching those liabilities. So, interesting point you raised, and we no doubt we will be talking about that in more detail in coming weeks and months. Any other questions or comments from members, please? Yes, Jim.
Just a general question about the guilt. So I'm saying that you're keeping extremely disciplined on it, and I'm just wondering how dangerous it is being too disciplined and never actually buying gilts. I mean, how close is the monitoring of purchasing the gilts to actually buying them, and is there a danger of being too restrictive?
Okay. We've had long discussion. We're doing this through the pool, through LGPS Central. We've had, Tamsin and I have had long conversations about how to do it. We've now got some very clear trigger of when we want to do it, and they are monitoring that daily. And we have put in place a process so that if we hit the trigger, they have the instruction to start buying. So if we hit it, you're quite right. We did actually earlier this year, we had slightly kind of higher yield, i.e. more ambitious targets to buy it, and we weren't able to. But it is, I think what I need to emphasize is that it is really, particularly with indexing gilts, it's really important we don't buy at the wrong price, because they're very volatile. And if we buy at too low a yield, i.e. too high a price, we could get the cost of actually getting that protection could be too high. So yeah, we're monitoring it. We have a process to monitor it. I can't guarantee we'll get it right, but we are trying hard.
Okay. Councillor Waters.
Thank you, Chairman. Just on those gilt prices and inflation, where do you see it going? Because it depends on the outcome of the general election. If it is Tory or Labour, where the IMF have said, look, we've basically got no wiggle room. The Tories are planning unfunded tax cuts, for example, on NI, which could potentially stoke inflation. We've got Labour's policy of attack on middle classes with like private school fees and that sort of thing. So how do you see that all impacting the prices?
I mean, the problems are going to be the same whichever party takes power in the next administration. And I think the only difference in the solutions will be who actually pays the cost. Clearly different parties will have different views as to who should pay. I actually don't think the election who wins will make a huge difference to the inflation number, unless a party goes a long way kind of off piece from what they say they're going to do. Where it might find, again, look at it from the fund's perspective, you might find a bit of a difference is areas like private equity, where the Labour Party has, I will say this quite rightly in my view, taken the view that the private equity should pay. There should be a kind of some of the loopholes around private equity should be closed, and that might have an impact on the returns which we can get out of private equity. But I'm afraid, see the result of the election in the UK as making a huge difference to the path of inflation or anything else.
Thank you. Any other questions or comments, please? Okay. Oh, Councillor Chapman.
Yeah. Are we talking about UK gilts, or are we talking about?
No, we're very clearly talking about global gilts, and the US is actually gilts globally, not just the UK. We're talking about gilts right the way around the world. And in some ways, I think the US is almost, this may sound slightly strange, more of a threat to UK gilt yields than the UK. The reason I say that is that the US is running a primary deficit of around 7% a year, and there doesn't seem to be any will among politicians to rein that in at all. So the levels of debt are going to go up, and even their own Congressional Budget Office, the equivalent of our Office of Budget Responsibility, has said that their debt levels will go from where they are today, 120% of GDP, to something like 250% by 2050, unless they change their path. And the fact is that US gilt yields lead the world. If they go up by 50, 100, 150 basis points, ours will broadly follow. And that's why I actually think the US is more of a threat than the UK.
Microphone.
Sorry about that. What is our strategy in that case, in terms of US gilts?
We don't have any exposure to US gilts at the moment. I mean, Tamsin may wish to add to this. So we have exposure to UK gilts and we have exposure to corporate bonds. We don't have any exposure to US gilts at the moment, I don't believe. But Tamsin, correct me if I'm wrong.
Not a good idea to have any exposure.
Trouble is, everybody, including me, can be wrong. It is something.
Yeah.
It is something we should certainly be considering in our universe, but I'm not keen on buying more conventional gilts at the current prices for some of the reasons I've been articulating.
But the only thing to add, maybe, William, is that our liabilities are based on what's happening here in the UK. So, if you want to comment about the matching of that.
But that's an additional risk, and if we hold sterling assets at one level, there's a much better match for our liabilities. There is a counter argument to that, which is that if the UK inflation is higher than the rest of the world, sterling is likely to fall, and holding foreign assets is a slight hedge against that. So it's not quite as clear as that, but certainly at the primary level, they are a better match. It's a better match to hold UK gilts.
Okay. Thank you, William. Any other questions or comments, please? Okay, I've seen. Oh yes, Councillor Butler.
Just a query. You refer to the China situation, struggling with deflation, and then it shows that economic growth in 2023 was up compared to 2022, but there's been a slowdown. But then again, we're then going on to say that manufacturing has picked up again in the last couple of months. Do you think this is just one of those sort of cyclical events with the China situation, and really, I just want to get my head around how it particularly might impact on what we're doing here.
Yeah, it's a very good question. The straight answer is no. I don't think it's just a cyclical event. This, and I may well be wrong on this, but China's got some quite deep-seated problems around the amount of debt. The amount of debt, not so much the government has, but the kind of state industry and the private sector in particular own real estate. And the US is not dissimilar. There's a lot of real estate debt in America as well. But I think the combination of that and the fact that China's very dependent on mercantile trade with the rest of the world, exporting goods. And of course, the US has made it a lot more difficult for them to export goods. So I think China does have some problems, and I think it's likely to take. It's more likely to be it's going to take longer to put this right than just the cycle. It also matters because China's central bank is the biggest central bank by volume in the world. It's bigger than America's, and if they decide to turn on the taps, then it could have a positive impact on the world. Ditto, if they decide to rein in, then it could have a negative impact. So it does matter. And I don't think we're going to see a kind of positive trend immediately.
Okay, thank you. And just one more from myself, William, please. So why is China buying all this gold right now?
Maybe because they're rather more strategic than Western governments. And if I'm right that we are moving to another era of quantitative easing, gold is probably a good asset to have because it protects you against paper and currency devaluation.
Yeah. Okay. Thank you very much. Okay. I see no more indications. We've had a recommendation and a note of the report. All those in favour, please show of hands. Thank you. That's unanimous. Okay. Item number 9 is our work programme. The recommendation is on page 24 in our agenda pack. So I move that formally.
I'll second it, Chairman.
Thank you, Councillor Taddington. Tamsin, would you take us through the report, please? And are there any updates to the report we've had?
Thank you, Chair. 3 suggestions were made for the work programme by Councillor Waters at the last meeting. A report to committee on the impact of the abolition of the lifetime allowance and its replacement with the lump sum allowance and the lump sum and death benefit allowance. This is now reflected in the work programme, with a presentation from Barnet Waddingham to the July meeting, to be followed by a report on implications for the fund in the autumn. A review of the fund's stock lending and its coordination with stewardship activity. A training on this has been requested from LGPS Central as part of the working party, which is taking place after the July committee meeting. Members are encouraged to attend this event and to let me know of their planned attendance by email or by accepting the meeting invitation. And also a letter in support of a private members' bill introduced by Baroness Altman, which was seeking to amend the Alternative Investment Fund Managers Regulations 2013. Our independent advisor sought advice from our broker on the most effective way to express support for this bill. Given the timing of the bill's progress, it was considered helpful for an early communication to be received, so a letter was sent by Councillor Kerry as the chair of the committee. And if any members would also like to express their individual support, I can share the letter wording for them to use. In the appendix, you can see the work programme for the rest of the committee meetings of the current cycle, and the committee is asked to identify any additional reports required. Thank you, Chair.
Thank you very much, Tamsin. And I just want to comment to Councillor Waters about that. I thank him very, very much for the help in getting that happen. Logistically, it was very difficult at the time to get everybody together to do the signing, and quite happy to help you do that in the same way. So thank you. Any questions or comments about the work programme, please? Yes, Councillor Waters.
Yeah, just a comment to convey my thanks for taking on board those suggestions. So it just shows we can cross-party come together and we have some sensible ideas.
Yeah.
Thank you.
Thank you. Okay, so we've got no further questions or comments. May I ask for a show of hands, please, to vote for the recommendation? And that is unanimous. Thank you very, very much. Item number 10 is a very important part of the meeting also. It's fund valuation and performance. The recommendation is on page 37. I'd like to move that formally, please.
Second it, Chairman.
Thank you, Councillor. Tamsin, can you take us through the report, please?
Thank you, Chair. This report is to inform the Nottinghamshire Pension Fund Committee of the value of the pension fund at the end of the latest quarter and provide information on the performance of the fund. The table in paragraph 3 shows the valuation at the end of March, at the end of December, and the value a year ago. The fund investments have increased by 276 million, which is 4.1% since the previous quarter. Within this valuation is 507 million of infrastructure investments, over 100 million of which is now invested through the LGPS Central Infrastructure Funds. Infrastructure investments are now 7.3% of the fund, with 8.6% of the fund committed to infrastructure investments against an allocation of 9.3%. Paragraph 6 shows a more detailed analysis of valuations by portfolio, and paragraph 8 shows the unaudited fund account for 23-24 and comparative figures for last year. Paragraphs 9 to 20 relate to the fund's holding in fossil fuel companies and investments in sustainable equities and renewable energy. There are a number of caveats that need to be understood in interpreting this disclosure, which are explained in the report, and I refer members to these. Over time, it is anticipated that fossil fuels will decrease as a proportion of the fund and that investment in sustainable equity and renewable energy will increase, but this long-term trend will not be smooth. At the end of March, and my apologies for omitting to update the date for the most recent quarter in paragraph 10, we had an estimated investment of 212 million in fossil fuel companies, which is 3% of the fund, and in sustainable and renewable energy investments amounting to 888 million, or 12.7% of the fund. Members are reminded that a more thorough assessment of our exposure to fossil fuels through our equity investments is provided by LGPS Central's carbon risk analysis. The core index portfolio section reflects the equity market movements over the last quarter. The Schroders portfolio shows the regional analysis of holdings and the purchases and sales during the period. And the LGPS central portfolio shows our investments made through the pool. Aberdeen have continued to manage our property portfolio. Members of the committee attended a property inspection in May, visiting properties in Barking, Bagshot and Bristol. And Aberdeen also provided a training on the alternative sector, which is a growing area of investment. Do you want to add any comment at that point?
You mean about the property tour? Yes, the property tour was fantastic. Thank you to the members that were able to come along. The selection of the different assets that we went to see was really, really interesting and covered all the different issues that we face as an investor in property. It's it's a couple of days out, but actually it's really, really worth it to understand what Aberdeen are doing in terms of managing our investments and the future strategy of where we see the best returns coming in the future from the selection of those kind of assets. So it was really, really good. And certainly next year, whatever happens in elections, all that stuff, I really recommend, and I'm sure the officers would also recommend people coming along. So thanks, Tamsin.
The specialist portfolio section shows the composition and valuation of the specialist portfolio and the transactions during the quarter. We invested an additional 30 million in the Aegon Sustainable Diversified Growth Fund during the quarter. The section on responsible investment activity summarises some of the responsible investment activity which has taken place during the quarter on behalf of the fund. Thank you, Chair.
Thank you very much, Tamsin, for that detailed report. And looking at the overall amount, at March we've hit the £7 billion mark, which is good news. And I think well done in terms of the strategy and the management of those assets. And obviously a lot of that's to do with the markets, but you've got to be able to choose the right bits of the markets to be in to get those returns. So any questions or comments from members, please? Councillor Waters.
Yeah, William touched upon this earlier actually, but I just want to clarify, how confident are we on the valuation of private equity, bearing in mind it's very illiquid, it's difficult to value. Quite a lot of private equity, it's actually at a substantial discount to its net asset value of what the true terms could be. Is it quite conservatively valued within our portfolio? Part of that is, I imagine it's quite a global exposure, so I don't know what impact Labour's tax legislation will have on the UK element of that. I imagine not particularly well. If you could expand.
Yeah, again, it's a very good question. I can't give you complete comfort on it because, as you know, private equities only get valued every 6 or 12 months. There's certainly quite a strong argument that the rise in interest rates and bond yields, which is going to increase the cost of finance, and the difficulty of exits, and there's no doubt that private equities are finding exits more difficult, raises a question over the valuations. Also, the fact that valuations can be certainly 3, 6, 9, even 12 months out of date. So I've got a lot of sympathy with the view that they may be overstated. However, I think the officers have to work with what they have. And unless we were prepared to commission our own valuation, I'm not sure whether it would add very much value. We really have to work with what it is. But I can't say to you for certain that these are robust valuations, I'm afraid.
Any further comment, Councillor Waters? I think looking at that, it's not a massive part of our portfolio, but I do understand what you're saying about the valuation. It's important we do understand that. Yeah, thank you. Yeah.
The response is slightly concerning, to be honest, because we don't really know what these assets are valued at, and they could be, as alluded to, overstated. I do know that a lot of pension schemes have actually taken another look at their private equity investments, and potentially we could see quite a substantial sell-off of private equity over the next 2-3 years, and that could further impact valuations. But who knows? I guess we see. I guess look, it's holding private equity as part of a diversified portfolio. It's just let's be wary of it.
Broadly, I would agree with that.
Yeah.
Be quite wary. Again, one on the other side of it, some private equity firms have taken the approach of selling off bits just to prove they can get a valuation higher than that. Higher. I'm not entirely convinced by that, but I think it's important not to be too negative about it, as well as being not too positive. But I completely take your point that wariness is advised.
Tamsin?
Yeah, just to add that we have this conversation with our auditors every year, as you can imagine, as all the points you've made are true. It's very difficult to get a completely up-to-date and objective valuation. However, we invest with carefully selected managers that we monitor their performance over time. And one of the things those managers don't want to do is overpromise and then underdeliver, or we won't be back in their next fund. And I would also say that the sell-off of private equity assets is beneficial for our secondaries funds, who are picking up some bargains as a result of that.
Thank you, Tamsin. Councillor Butler.
Thank you, Mr. Chairman. Just a query really on paragraph 9, where we're talking about sustainable investments. Just curious, really. It says a pension fund has been asked to publish these figures, which we're doing. Was that a request from us, or is it I don't know, a national thing? And also, is this going to be a sort of regular sort of update as time goes on to see how what we're doing in the fossil fuels? And also, just to endorse your comments about the property tour, I was on that, and genuinely interesting to see how we are investing our fund money, and quite an eye opener. It was also an opportunity to just ask sometimes what might be silly questions, simple questions, but there were some very clear answers coming through, and I think it helped garner a bit more understanding as to what it's all about. So I just really wanted to endorse your comments on the usefulness of it.
Thank you, Councillor Butler, for the comment about the property tour. On the first, I'll hand over to Tamsin to answer the first bit. But yeah,
this is a regular disclosure. It's within every quarterly report. It was as a result of a request from the committee, prompted by attention from various members of the public who are interested in this.
I'll say that in a slightly different way. I think we've been very proactive in the way that we've produced and shown information about our investments to help with that communications. So yeah, we were very early in doing that. Any further comments, questions? I see none. So the recommendation has been moved, seconded. Can I ask for a show of hands for who's in favour, please? And again, that's unanimous. Thank you very, very much. Okay, so that takes us to the end of our normal business. So item 11 at this